What's up, everybody? We are back once again. Every Tuesday at 7 p.m. we do this. I'm going to start out tonight. I want to go over Bitcoin a little bit. I got a couple things I want to touch down on. But I want to start here. I've had a lot of people ask me, everyone's buy the dip. And, a lot of people don't understand when exactly to do that. So that's something I'd like to address tonight. Using Bitcoin as an example. If you guys could, if you enjoy this stream, hit the likes for me. Share this stuff if you know anyone else who wants to learn a little bit about what we're doing here. So obviously the talk of the week in crypto is this enormous decline that we've had over, well, I mean, it's been happening for a while, but we really got hit the other day. On the 18th, made it all the way down to $30,000, which if you look left back here, early January, we got a couple wick lows in that area. It bounced, it respected, I think, 3 times over here. And as soon as we got down to that zone, there was so much buying pressure coming in that we wicked right back up. I got these couple support and resistance lines drawn in here. The main one, it's kind of the one that I'm keeping my eye on, is if you follow me on Twitter, we talked about 36, about 36.6. It's where we put this double bottom in here on the daily. You did wick down here to 30,000, but you came back up and you put in this double bottom on the daily with a nice engulfing candle coming up. And we did end up testing these lower areas again down near 30,000. But as you can see, we did not make it all the way back down. So we did put in a higher low there. And same thing, we wicked up to about 34.8, where we ended up putting in a close. But after that, we engulfed that entire candle, came back above that 36.6, which was old resistance. I'm going to switch over to the 4-hour chart here so we can get a better look. All right, so here, I'm going to take this one out. There's that 36.6 mark here. So we fell back underneath there. We lost the support. We got this nice impulse up. And came back down and retested old resistance as new support once again. So we back tested the spring there, which is that's a really good sign. It shows us that we now have regained support at 36.6, which we've talked back and forth about the possibility of retesting these lows, which we did. But now that we've got support back up here at 36.6, we can start talking about this 42 zone, which is, we're in a real big range here between that 30,000 and 42. Nothing's really ruled out at this point until we break 42,000. That's where I'm going to start being bullish on Bitcoin once again. Yes, I have indeed bought the dip. That's part of my strategy. When it comes to Bitcoin, Bitcoin's a long-term asset that I do plan on holding for a very long time. And the reason why I brought that up specifically is, all the way down, you see the memes going around, you see everybody talking, let's buy the dip, and it just keeps dipping. So what do you want to look for when you've got, these drawdowns? You keep making lower lows, lower highs, lower lows, lower highs. you want to wait. Ideally, it's really tough to time the bottom, especially on volatile assets like Bitcoin specifically. So what I like to do is I like to, obviously buy the dip, but I do it in different stages, right? I'll dollar cost my average all the way down. The reason you do this is because ultimately you are giving yourself a better averaged position. If you did, buy up in this area, anywhere up here, the idea is you always want to leave capital on the sidelines for stuff like this, because this is where the money's made. You want to see these deep retraces. This is giving you, an opportunity to take a new long position on an asset that's been running up, for the last year since the COVID crash. It's been on a tear, and this is the stuff you want to see. This is why you want to keep money in the sideline, because this is where the opportunity is. But obviously you do want to have a rhyme or reason to when you're buying in. You want to see a few things. For one being, obviously, you want to see some sort of bottom. One thing I like to look for, and we just mentioned it on the daily chart here, is when you put in a double bottom, like these two different zones we got here on Bitcoin. I mean, that's powerful stuff. That's showing you that there is a demand line there, and it'll give a trader confidence to start a new long position if that's the way you were coming at this asset. So again, the best way to do that, it's real tough to call bottoms on stuff like this, but you got two options really. You wait on the sidelines until you have developed all these different levels after a correction, and you can really see where there is support and resistance. And right now that's at 36.6. But again, if this is something you could have been, instead of trying to get the very bottom, set up. I like setting up limit orders, especially when it comes to crypto. Once an asset starts falling, or perhaps when you're entering a new trade, I will start my position, proportionate to how much I intend on investing. If I was going to put $1,000 into Bitcoin, and say that we saw this on the 19th is when we hit that $30,000 zone. This is an area that I bought into. I think I was probably about 32,000 by the time I got in. It happened really fast. This entire wick is 1 4-hour candle, but my strategy there was we didn't know that was going to be the bottom. You never know until you get the data on the chart, at least coming from a technical analysis standpoint. You need certain data to know where you do have support, where if you found a bottom. It's the same thing goes for when an asset is running up. It's all the data's here. All these levels come from, if you look left back in January when we were falling, from that about $50,000 here is when we started coming back down again. And you want to look left, because that's information that people are going to use to, try to find the bottom. And historically, these are zones. These aren't just magical lines that, look pretty on a chart. They're zones where at some point, and this is back in January, traders set up supply up here. That became a resistance point. You got this large impulse up coming in December. You hit this top here. So now that's going to be a reference point from there on out for, as far as I'm concerned, the history of the asset. That's always something I'm going to be looking for. And that is a wick high. And then down here, trying to find a bottom when the asset's coming down like this, you look left. We've got this wick low here. We've got same wick low here and wick low here. And what I usually do with my charts is I will, I'll have a line here up at the wick, and I will also, find, these double bottoms, especially on the daily chart. That's a powerful thing. And that will be two areas right there that I would look to find a bounce. And again, buying the dip isn't only, hey, the asset's down, I'm just going to throw all my money at it and see what happens. Buying the dip's also an exit strategy. If I was caught off guard by, this correction Bitcoin had all the way from, about $60,000 up here, it's also a strategy to exit your position. It's just, if you want to get on the sidelines, if you don't want to be in the market when there's, movements like this and volatility like this, if you're not somebody who tries to take advantage of that stuff, what you could do is you buy the dip and then you sell the rip. Everyone's heard that phrase, I'm sure, at some point in time, but that's kind of the point, right? If you have money on the sideline and you get caught off guard and this asset draws down 50%, well, you're down 50% now. But if you still have a percentage of your capital set aside for stuff like this, and you buy down here at 30, just for, argument's sake, we're going to try to use a round number here. Say you bought in at 60, and then you buy again down here at 30. Well, now your average, you're not going to be down. Well, at this point, yes, you'd still be down, if it lost 50% of its value. But if you buy in down here, now you've got an average position, 60 and 30, right in the middle is 45. That's going to be your break-even point. What you've done is you've averaged your position down. So you don't have to, instead of having it be a waiting game, I'm just going to wait for the asset to go and correct or start to make some highs. Now you've got an edge. Say, even if you expected Bitcoin to continue down to retest some of these lower levels here, what you do is you address old support and resistance levels, and if you set up a buy here, what you're going to do is you wait. Generally speaking, if you have a strong support level like we did back here in January, we had a lot of lows all in the same area, you're going to get an initial bounce. And especially if you were exiting a position, that would be a good time to take advantage of it, instead of just, all right, I'm down, I can't take it anymore, I'm getting out of this position. Essentially what you're doing is you're using that capital as a trader. You're buying this asset at a lower price, you're averaging your position, and then you take advantage. Even if I thought Bitcoin was still going to fall back down below this support that we've developed down here, what I could do is, when you get that dip, you buy, you place an order down here, or like I said, you could set up limit orders. And then when it does get, whether it's just a relief rally or not, now you can exit your position. Even if we don't make it up to 45 to break even, what you're going to do is you're going to mitigate your losses. Instead of being down 50% on the asset, if you get a nice relief rally up, I think we were up 40,000, would have been about 25%. And if you sold up here, you might not have got all your money back, but what you would have done is eliminated a lot of your losses. So buy the dip isn't just buy, hold, and hope it keeps going. Sometimes it can be used effectively to get out of a position. And again, maybe you just want to wait on the sidelines until, Bitcoin might chop around in this area for a while before we end up breaking this 42 zone. But what that's going to do, if you sell that rip, that relief rally, you can exit your position with less loss. And then if it does continue downward, or if it retests these lows, just like we did these last couple of days, right? We came down to 30. We rallied all the way up to about 43,000, and this is within, you know, about 24, 48 hours. So that would have been an opportunity. You could have sold that relief rally we got initially, you know, and then when we came back down here, tested these lows once again at 30,000, that could have given you again a buying opportunity. And again, with the relief rally we got off that low, you could have done the same thing, and take advantage of the volatility like that. If you guys got anything you want me to look at, drop some of them in the chat here. I've got a couple other ones I want to go over real quick, but if you got something you want me to look at, by all means, I'd be happy to. I want to look at Ethereum. Ethereum is obviously another one I've gotten a lot of questions about personally. And essentially all the altcoins in the market are going to follow Bitcoin. Whenever Bitcoin has a massive correction like that, you're going to see the same, sometimes exaggerated drawdown in the altcoin market. And again, that's something, you know, as a trader, that's something you should be taking advantage of. You know, if you know Bitcoin is, you know, going to start making some lower lows, if it gets rejected at a resistance line, you know, perhaps that's strategically what you could do is, you know, whether it's all of your position in a certain altcoin or whether it's a partial position, to free up capital, you know, before you get any dips after a rally like this. That's something that could be really effective, because as soon as Bitcoin catches its feet again, you know, when you find support, all the altcoins always rally. You know, Bitcoin doesn't have to be going up, as long as, you know, you're not making lower lows. As long as it's not still correcting, you're going to get a rally from the altcoins. And as you've seen, since Bitcoin hit that bottom at about 30,000, I mean, there's some of these assets are already up over 100%. So as a trader, I know this hasn't been the most direct way of describing what I'm talking about here, but it's all, you got to have a strategy, and more than anything, you want to have a plan. And I guess that's what this all really boils down to. If you're buying the dip, you got to have a plan. Are you going to sell? Are you holding? Are you just trying to average your position over time? When is the dip too much for you? This is all stuff you should have thought about ahead of time, and really had a plan going into any trade, because what it does is it helps you free yourself of, you know, the emotions in the trade. You never want that to cloud your judgment, because you can make logical decisions like this. You know, I saw a lot of Bitcoin's going to zero, Bitcoin's over, the whole thing's done. It doesn't make sense. You know, outside of your emotional response to the price action, none of that makes sense. Of this year, out of every year that Bitcoin has been, you know, in the news, in, you know, being talked about as, you know, something that has a future in our financial system. Out of all the years, this is the one where Bitcoin's just going to go away. It's going to magically poof, disappear. It's just, you got to use your brain, and that's, you know, where technical analysis comes in to play. With Ethereum here, so I'm not sure if this was on the stream. I think this was after I had streamed last week. But we got this nice little harmonic that formed, bullish shark on Ethereum. You know, we retraced off of our highs up here at about 4,300, came back down here, and part of my trading strategy involves locating stuff like this. Bullish harmonics are momentum shifting structures that usher in a price reversal. So it generally something, the context you want to find an XABCD like this in, it's perfect. You know, we got this nice run up we had on Ethereum, you know, whether it's a correction of its own or being drawn down by Bitcoin, all the same, you want to look for a harmonic like this forming. And this would have been the pattern completion zone down here at about 1720 to about 1800. And looking left, it's a very logical area for this asset to turn around. And again, if you're using common sense on stuff like this, as opposed to, oh my God, Ethereum's going to zero. First of all, if you are a swing trader, you should always have stop losses set up. You should never have an asset that draws down your portfolio for whatever reason to a point where you're shooken emotionally. And that's where position sizing comes in to play in my strategy specifically. I've talked on this stream about doing 3-to-1 trades because you got to be right once out of 3 if you're doing 3-to-1 risk to or reward to risk, because it's statistically you have a better chance of making a profit. You have the odds in your favor, and the same thing goes for when you're looking for support and resistance, stuff like this. The odds are, if an asset's crumbling down like Ethereum was, once we hit about 34, it dropped off the face of the earth. This statistically is going to be an area, if you look through the history of this asset, that has a lot of chop. We had a lot of time spent in this area. It was right before the big run up back here at the end of March. And the way I would factor that into my strategy, say you were taking a new position on Ethereum down here. First off, we want all of our variables. Not only is this the pattern completion zone of this harmonic, but it is right at an old support and resistance. At the time, I'm going to move over to the 4-hour chart here. One thing we always want to look for, if you're buying the dip, you don't want to buy it blindly. You want to look for, first off, correction, deep retrace down to support. You want to take a look at one thing we always look for when we're buying an asset that has been drawn down is bullish divergence. You've got your MACD making less, you've got less negative momentum on the MACD, but at the same time, between this zone here on the MACD, you've got a lower price. Price is coming down, the MACD is heading positive, which is bullish divergence. That's classic bullish divergence, which it tells you that it tells you that this downtrend is ending. The negative pressure is waning, and the bulls are coming in to give it a run. So you've got historical resistance, historical support, you've got bullish divergence, and the same thing goes. That's something you would want to see on the RSI as well. It's just one more form of confirmation. While that price is still coming down, you've got your RSI making higher lows, doing the opposite of what the price action does. And again, that's bullish divergence. They're moving the opposite of each other, which would imply that there's impending price action to the upside. And as you can see with Ethereum here, that's what happened. Richard, the ladies' man over here, right? What's up, brother? So again, the same thing with Ethereum. We've got this this zone here. If you look back here, we've got this double top. Again, resistance, support, and coming back here, you can see that we've still kind of regarded this line as a resistance and support level here again. We did break underneath it again, just like Bitcoin did. You know, Ethereum is going to follow the lead that Bitcoin leads it. I don't think that came out right. Bitcoin's the leader, and the rest of the market's going to follow. It's like trying to trade stocks that are in the S&P. When the S&P is down for the day, it's going to be the same type of thing for the market in crypto here. But Ethereum has once again retaken this zone here, this old resistance and support. Not only that, but we have bullishly engulfed right through it after, you know, it's still, you can see it's clear that it's still being regarded as a support and resistance level. But we are now on the top side of that on the 4-hour chart here. And if we break it down a little bit further on the 2-hour chart, you can see resistance, resistance, tried to get up above it with that wick there. And then we had this nice piercing line reversal here, Japanese candlestick pattern. And then we came back down, and it's now being tested as support, and we just took off. So I'm bullish on Ethereum right now. But again, using my same logic and taking a trade, you know, this wouldn't be an ideal place to take a new trade on Ethereum, just because of the fact this is the top of our zone. This is the bottom. We're kind of in the middle here. So this kind of jumps back to, you know, position sizing. When I was talking about how, you know, if you're entering a trade, leave some of the capital on the side in case you do get a correction. You know, say Bitcoin takes a move down overnight, Ethereum's not just going to keep on going. It could. Statistically, it doesn't usually happen that way. So if I was going to take a trade at Ethereum, even though we haven't closed this candle yet, but we are back above that resistance. If I was going to take a trade here, what I would do is I would break my entry up a little bit. You know, say you wanted to put in $1,000 on Ethereum, you know, perhaps a better way of doing that would be to add a little bit to your position here. You know, if Ethereum does come back down to test these lower lows, that's going to leave you extra capital on the sidelines, so that if it does, instead of stopping out and then again having the same predicament trying to find the bottom again, what you could do is now you can just average down a little bit. You're not going to get, you know, every single dollar that you possibly could have gotten out of this trade, because for all we know, Ethereum could take off from here and never come back down here. But you know what? As a trader, you want to work with statistics. You want to follow a set of rules, and you know, sometimes it's going to work out for you. But you know what? If you go all in right up here and Ethereum does test these lower lows, and well, now you got two options. You're either going to sell at a loss, which I usually don't like to sell the bottom. It's not a strategy that I teach, for one. Or you wait it out. You know, if you're a long-term holder, you've got the option to just wait it out. You know, if you're trying to, you know, trade, if you're a swing trader, if you're trying to trade, you know, shorter plays, that's when that would benefit you, because, you know, you now, instead of being down however many percent down here at the lower end of the channel, now you've got an opportunity to add to your position. And you've got to think to yourself, well, if I add to my position, what if it keeps going? So the way I would approach that if I was trying to buy the dip is, you know, I would set up a limit order after, you know, however you want to enter your trading position here. If you needed, or if you wanted to take a trade on Ethereum, I would set up partial order here, and I would add limit orders at the same time, because again, if you take the order up here and you wanted to add your position down here, timing it is not easy with crypto. It's very volatile. It can be, at least. So I would set this all up in right at the same time. If I was doing $1,000, I'd put 250 here, and then I would set up a couple limit orders here, because realistically you wouldn't want to see Ethereum come all the way back down to D or lower. You'd want to see a higher low after this, and potentially this could be our double bottom here at 23.90. That could be our higher low. But if it did retrace down, you'd want to see a higher low. So I would probably add a couple orders down on the lower end of this range, and you'll end up with and a price that's averaged out, so that when this asset does continue upward, you're in a better position. You're going to get back to net positive faster. But at the same time, you could also add a stop underneath here, because if it did retrace underneath our support that we've defined, chances are it's going to go further down. And that's the whole thing. When do I buy the dip? When do I buy the dip? If it did go further down, you could at the same time set up another order at your next support. Again, you're faced with the question, is that going to be where it stops? Well, it doesn't have to be, because when we retrace down to all these congestion zones, if that asset, I don't think Ethereum's going down to these levels. But if we did, you're going to get a bounce. You're going to get a reaction. You're going to have a demand line at these levels. And again, that's something that you could take advantage of using this method, if you want to buy the dip and then sell the rip. But I do like Ethereum. I think I got a little off topic there. I do like Ethereum above 26.25. And I think ultimately, even if it came back down, I think a harder support level here. I heard something about the GME and the AMC stuff again. I've taken a couple trades on GME. I'm not gonna lie. I'm a trader. I don't, the reason I take trades is, all based on technical analysis. And I'll tell you what, GME and AMC both did. The charts look good. What's up, Lee? And then that's my reason for taking trades in the first place. I don't care what the asset is. If it's, how much slack I got for taking Doge trades, but that was one of the most, the Doge chart, especially back in January when we first talked about it, was one of the best charts on the market that I saw. And everyone was, oh, it's, it's a meme, it's this, it's that. And the sentiment behind it is it doesn't have a place in my trades. And especially when you're using position sizing, I try to position I try to make all my positions relatively the same amount. I always risk about the same percentage. And that's another thing that kind of takes the emotion out of it, right? Because I'm not praying that Bitcoin goes to the moon. I'm not praying that Ethereum, I don't care which trade I take performs well. If I take it for the right reasons, with a plan at the beginning, with my set of variables that make the trade appealing to me, and ultimately it gives me an edge on buying into the asset. It doesn't really matter, because I followed my rules. I trade 3-to-1 every single time. So every single asset is just another trade to me. I don't have an emotional attachment to any of these trades. And when you size all the trades relatively similarly, instead of trying to go all in on one specifically, or, granted, you can go in heavier on conviction trades, but the reason that's important is it's a psychology thing, because you take all the same trades, it's just another trade. And if you're doing it 3-to-1, you've got the odds in your favor, and you set the trade up and you forget it. That's what works for me, at least. because a lot of the times when you're going all in, or if you're going heavy in on a trade, and it's not because you have actual, data that supports doing that, you get the hopium, and you can never expect. Technical analysis isn't magic. It's not this thing. Oh, I know how to analyze a chart. Everything's going to be perfect. No, but it gives you an edge. It helps you define, good entries, good exits, potential areas that where people might be taking profits, and that's something that's going to give you an edge against other people. And again, if you're using data from a chart, it takes the emotional part out of it. Cardano, yeah, I could definitely bring that up. If you let me go, I'll ramble forever. So if you guys got something you want me to look at, drop it in the chart. In the chat, please don't drop it in the chart. People can hate on Doge all they want. I'm actually, before I was playing the chart when it comes to Doge, but now it's more than that, because I do think Elon is planning on doing a lot with Doge. I don't think one of the most brilliant people of our time is going to be spending so much time talking about Doge for memeing. It's not. I don't think he's trolling people. I think he's legitimately going to do something with Doge that's going to probably surprise a lot of people. But I'm not going to get into my tinfoil theories this year, or this week. We're gonna leave this right to the charts, and I'm looking at ADA here on the 4-hour chart. First thing I'm seeing is, we've got this positive momentum waning a little bit. There's no bearish divergence or anything. It's just that means that it's slowing down a little bit. It's taking a breather. RSI is kind of neutral. But what I do like about the RSI is it's kind of doing, if we look down here, you kind of got this zone, an inflection point almost at about 40 on the RSI, and we've got this nice impulse above, and it almost looks like we're coming back down to kind of do a spring back test, the same thing I talk about on the charts. So those are both confluent on the 4-hour, that ADA is slowing down a little bit. But if we look at the candles here, again, we're going to look left. I don't think I have any zones here, but we got this nice double top back here in April. And we've also got this zone right here just under that's been respected a few times. Candle wick high over here. Looks like a double top again back in the middle of March. And if we come back over to currently, we fell below that. We ended up putting a bottom in here at about $1. You've got this nice Morningstar doji, and immediately after that, and that's at 117. So I'm gonna put a mark here on 117, because that's our local support right here. That's, we got this nice engulfing candle coming off right after the indecision, sprung back above this old, that was our lower one here. We had resistance at this before. We got the impulse up. We came back down. We retested the support, or the resistance that we broke. We retested it with this nice double bottom here on the 4-hour. Also, we back tested that as support now. It's no longer resistance. Now we have support at about 144. And it looks like we're trying to put in a higher low here too on the 4 hour. But anything above this 144 for Cardano, actually, if we go with the wick low, about 143. You know, if we fall underneath 143, I wouldn't rule out coming right back down to retest 117 again. But anything above there is going to be bullish for me. If we were looking at a fib retracement here, yeah, it looks like 160 is going to be our resistance, which is also the 618 Fibonacci retrace off of our high here on the A point. So that's kind of the zone for ADA, about 143 to 160. If we break 160, I would expect we'll probably go right up to about 193 again. And the reason why I say that is we got all these tops over here, all these candle close tops. We've got this A point on this harmonic right at the same zone. You know, you might get as high as, looks like we put in a local bottom here at about 196. That's going to be, that would be my target. If we do break up higher, 190, I'd be conservative. I would go, we got this doji over here, and then the engulfing candle after it. I would probably say 192 would be a nice target. If you want to be even more conservative on that, you've got this wick high from May 19th, double top, wick high again, and that is putting you at about 185. So that would be my top of the zone here for ADA, you know, between 185, 193-ish. If we do break below 143 again, we're probably coming right back down to 126 or 116 down here. You know what? I've got 10 hours of tinfoil hat conversation. I've got a lot of, there's a lot of stuff going on in the crypto market, especially. That I've kind of got my theories about. You know, I see there's so much hatred going on with Elon Musk right now. You know, about, oh, he crashed Bitcoin. Stop. One guy did not crash Bitcoin. And if you actually look at the inflows of exchanges before he made that tweet, somebody was about to drop 20,000 Bitcoin on the market. It was already transferred to the exchange. I would like to lean more towards, he kind of gave you a heads up in his own, I'm not going to, you know, get in trouble with the SEC type of way. That's what he does. That's what his Twitter, it's not, he's not trolling. He's not rambling. He's literally kind of just giving an FU, in my opinion, to the SEC. He's always been, never been a fan of the SEC. He's never been a fan of short sellers. And I'm going to leave it at that. But I think there's way more to what he's doing that people really understand. And again, I initially started trading Doge because of the chart. It was textbook Wyckoff reaccumulation going on back in January. Now, let me bring that up real quick here. And this is to kind of show you what I'm talking about. If we go back, what was it, January? Originally, anyway, the reason why I got into the trade with Doge originally was because of this freaking chart. Where was it? I think this is where we originally started talking about Doge in the group. You know, after this, the impulse, I think that was right around the 1st of January. We came back down, and you've got this Wyckoff accumulation thing forming here. And what this shows me, looking at this chart, is you've got, you know, your impulse up, take a look at the fib retracement here. So off of our highs, actually, I'm going to switch that to the wick high here. So off of our high, we broke this resistance from December at about 5 cents, came up, corrected back down. Obviously, we got a nice blow off top here. Nothing's going to go up forever, but when we came back down, the same thing that we saw on the Bitcoin chart earlier. You've got this amazing wick that's spanning, you know, from 7 to almost 9 cents. What's that, like a 20% wick here on Doge, you know, so it shows you've got demand. Same thing on all these lows on this. You've got a lot of demand pushing this asset back up every time we make these lows. And if we look, we're going to take a look at the MACD here, right? The price is coming down. We hit a 78% retrace, which is a nice value area on an asset that just ran up. At 886 would have been better, but if you look, we ended up just about hitting the 886 after this initial impulse back up. We got rejected at about 10 cents, came back down. We did hit the 886 retrace, but not only that, but the same thing we're looking for. You've got your price making lower lows, and at the same time, you've got your MACD showing you that there's not as much negative momentum pulling this asset down. You've got bullish divergence. The MACD is starting to go up. The price is still coming down. And at that point, you know, you've got that reaction once again. Nice, heavy, long wick. You got an impulse up. You come back down. And if you look left over here, we've got this wick high, which at that point, you got the impulse above it, come back down, back tested the spring, and then we put in this low or higher low. And once we broke that resistance at about 8 cents there, you know, we went sideways, came sideways, and then you've got, and I guess this is kind of a nice educational part here, because this is a form of divergence here. You've got the price coming down on the asset, and I think I might be wrong actually, but price is coming down. You've got the same level of negative momentum. It's the same idea, you know, price coming down, negative momentum going up, because you're still, even though the price was coming down, there's no, the negative momentum is not growing. And that's class C bullish divergence. It's more of a continuation form of divergence. It's basically telling you that even though that price is still coming down, there's no additional negative momentum building. It's arguable right there that negative momentum's maybe a touch lower, but for educational purposes, that's what that would be. And and you can see we broke down below our support level, and that, you know, once we confirmed that there was you know, this continuation form of bullish divergence, that tells you that this asset that's been reaccumulating, you know, we started making higher lows, we hit this, you know, we fell under support, and I'm willing to bet, without even looking at the chart, this was probably volatility from Bitcoin, more or less. You know, that's a lot. That's one reason why I try to stay out of altcoin trades when Bitcoin's indecisive, you know. I slowed down a lot. I have a Discord group, and on Twitter, I always post charts. I post a lot of charts. But when Bitcoin is indecisive, when we don't have an edge, I don't want to post charts to altcoins like this because they can't be trusted. We broke support on Doge before this rally. And a lot of times when you see stuff like this, when an asset or an altcoin goes against technical analysis or makes these wild moves off of support or the corrections, it's usually because of Bitcoin. And it doesn't matter how beautiful the chart is. If Bitcoin decides it wants to ruin your day, it's going to ruin your day. So it's times like that I really try to just sit back and wait. You don't always have to be in a trade. I got you, Richard. XLM. Yeah, I'm down. Listen. If you need tinfoil, man, the problem is all this stuff. The tinfoil theories I've had about Elon, dating back to last year, all ended up being true. And I think there's a lot of stuff going on surrounding that. XLM. But it's a story for another day, man, because once I get going, I could talk your ear off about that. All right, if I could find XLM here. So XLM's another one. I'm on the daily chart right now. It's same kind of idea, on the Bitcoin chart and the Ethereum chart. You got that initial correction all the way down here. I think we bottomed out about 27 cents. You got that long wick because somebody was waiting for that drop. It's almost like it was planned. A lot of buy orders came in and it pushed that asset up really fast. We didn't even have a chance to close anywhere near down here at 27. We ended up putting in a close at about 42, 45. And again, same thing that Bitcoin did. When Bitcoin took that second dive, you got XLM finally coming down here at 27 cents. And if we look left, if we were waiting for a bottom on this, well, if you look left, our next area of support and resistance is right here. And that I had these lines based on, you've got this double bottom here. That's your lowest close down here on the candles. And then above here, you got a double top. So it's a congestion zone. You're at least going to get the reaction coming into an area like that because that's where traders set up their demand and support lines. And as you can see on XLM, we did bounce up just like everything else. Everything, as soon as Bitcoin got its feet, the rest of the market really went nuts. It's a great trading strategy, by the way. I'm going to move down to the 4-hour chart here. XLM is one I did actually post a chart for. And we've got this black swan that formed on XLM, right? This is where we started crashing down. That's that massive wick. And in the process we formed, this is another harmonic that's more popular in Forex, but it's a black swan. And this is the PCZ down here at, again, a great place for a harmonic to complete because it's old support and resistance. And then you got this impulse up right at the pattern completion zone. And if we look down here, and this is why I liked it, and this is why I posted this chart before we did get the reaction here. I posted it when it was completing, actually, on Twitter and in the Discord. But we've got negative momentum, waning, heading up. You've got your price, and we go with the candle close when you're trying to establish points where there's bullish divergence. You go with the candle close. But the same thing, price action coming down, your negative momentum is moving up, telling you that the bears who've been selling and selling and selling are losing control because there's too much demand coming in. There's not enough negative momentum to keep this price coming down. So that's where the bulls come in. That's where, you're going to get this reaction. You're going to get, a reversal of the price action coming down. And it's the same thing. No, the RSI, you could argue, you see right here, same thing. You double bottomed on the RSI while that price was still coming down. So that's bullish divergence, but it's not the same as this. This is more of a continuation. It's the class C bullish divergence. But the same thing, it's telling you that this asset is making a reversal up. And with XLM here, if we're just going to look at some quick levels, it did the same thing that these other ones are doing. You got the impulse, your old resistance at about 40 cents back here from the 22nd. We got the impulse up. We broke the old resistance. We came back down, and it's at the moment, we've retested that as support. You've got all these local double bottom. You got a couple wicks down right to that 40-cent point. And if you look left, that 40 cent lines up, that's 43. So we're hitting, at the moment, it's what's holding us up right here is this 43 cent resistance. But if you look for that 40 cent level that we plotted over here, you can see that's old resistance. Same thing all the way back. Again, you've got a wick high back from February. You come back here to January. And that's why it's so important to look left, especially if you're looking for the bottom of a retracement or a correction. If you're looking for areas to take profit, if I was looking to take profit on XLM, next major level I'm seeing here is you've got this double top. If you look over here on our fib retrace, that double top is also the 618 retrace, which is one of the most common retraces. And you can see you've got reactions to that 58 over here. If we were looking at it like this, another potential area you could be looking at would be 54, 58. That's probably going to be, to be conservative, I would look 53 might be an area that we face resistance. You might see traders taking profit at that level, before giving the asset some room to run back up. But with XLM, you can see right now at this point, they're facing all this resistance and congestion. You do have the MACD losing its positive momentum, which could imply that we're going to kind of bounce around in this area until we start seeing more positive momentum. And if we did break that 40 cent level to come retest these lows back down here in the lower 30s, that might give you an opportunity to say you've got this negative momentum, or this positive momentum comes down a little bit. You might get a little bit of negative momentum forming, and that would just give you another form of bullish divergence where the asset could then continue back up with more positive momentum. We might not paint any negative momentum on this asset. It depends on Bitcoin. If Bitcoin continues up from where it's at right now, I would definitely be looking at 53 for XLM, and then again up here at about 60, 58, 60. And then again, if you break that, you're probably coming up here to the top of the range, back up to about 75 cents. Yeah, if you look at the price action here, once we gained support back here in April on the 23rd, this price went right up to the top of the zone. And when you're trying to find targets or likely places you might, you might want to take some profits, you want to look at the price action correlation between the zones. How does the price react, when it came down here? Historically, when we hit that 31 cent level on XLM, we got that nice bounce. You got this nice long wick that shows there's a lot of demand down in this area. And guess what? It repeated itself. The same thing happened when we got this correction down to that zone again. You got the wick, big old wick coming up. You tested it again, and it's straight back up. So once we've got confirmed support on XLM here above 40 cents, which is what we're doing right now, you would think, just looking at the historical price action correlation between zones, last time we found support at this level, we rallied, came back down, tested support one more time, and then we rallied right to the top of the zone. So looking at targets on the way up, we could very well come retest 75 again, but it all depends on Bitcoin. And I'm going to touch real quick back on Bitcoin. And same thing these other assets are showing on the 4-hour. You still got this negative momentum, or the positive momentum, fading a little bit. It doesn't mean we're coming down. All that means is we might go sideways a little bit. Anything above that 36.6 zone for me is bullish. If we do break 42, that's super bullish for me. But until then, I'm kind of neutral with Bitcoin. I do like that we did find support above that zone. That's one that we mentioned on Twitter and in the group. YS, a 3-to-1 trade. Let me show you real quick if we got a few minutes left. So if I'm looking at my chart, you should always have a chart with any asset you're trading. Whether obviously you should learn how to put these levels on a chart, but you should always, or at least I like doing, you've got this long position tool here in TradingView, right? So if I wanted to take a trade on Bitcoin, I'm going to click my long position tool, and up here at the top, that's going to be my target, right? You can adjust it wherever you want it. And then the bottom, all the way down here, is going to be my stop loss. So it's a good thing to practice. Even if you're paper trading, do it for fun. Do it to learn. If you use this long position tool, say if we break 36,580 that I've got marked out here, I know it's kind of probably hard to see. Let me make that a little bit bigger. All right. So it looks great. But it'll show you my stop loss is 3.5% underneath where my entry would be. And then say my target is, all right, say we're looking at this wick over here as a possible support and then resistance. So I'm going to put my target just underneath that. So my target is 20%, and my risk, just so it looks a little bit cleaner, I'm going to say say my risk is 6%. Now right here, it's going to show you what the ratio of risk to reward on that trade would be. So if I'm going for 20% and I'm risking 6, my risk to reward is about 3-to-1. I could potentially make 3 times as much as I'm risking. And the whole thought process behind that is every trade is 50-50. If you just blindly take a trade, you got 50% chance it's going to be right. Whether it goes up, it goes down, that's your only options really. So any trade is 50%. So if I win, statistically, you'd be at 50%. If every trade I take, I have a chance to make 3 times as much as I'm losing, and I'm right half the time. Just it's coin flip. I only got to make 1 trade out of 3 for that to be a profitable, because if I get 1 trade right, I'm making 3 times as much as I risked on any of them. And if you're right half the time, just like a coin flip, that's going to put you statistically, using mathematics and probability, you've got a better chance of making that a successful trade. But you got to stick to it. A problem with a lot of traders have is, especially after a correction where you've lost money or after a couple bad trades, you'll get this mentality that, oh, even though this was my trade, I was going for this 20% target. Newer traders, when they've got their emotions involved, they're going to, a lot of the times, and I don't know why this happens, but when they see their trade start doing well, they're going to be quicker to get out of the trade because they want to get out while they're on top, which that wouldn't work with this strategy, because the whole strategy is every trade I'm taking, I'm either going to make, say I'm risking $10, I'm either going to make $30 or I'm going to lose $10. But I have to let the trade play out. You have to trust the technical analysis, because statistically that will keep you in the program. That's if I cut all my winners before they reach their 3-to-1 target, well, now if I have a couple bad trades that draw me down, say we're at 6%, if I cut this one short of my target and on the other trades I lose, the strategy doesn't work like that. You have to take 3-to-1 trades, and you have to let them complete. Whether you lose, whether you win, you shouldn't be focused on that, because you took a trade with the right set of variables, statistics on your side. And if you're taking the trade, I'm trying to think of the best way to say it. It's just you got to follow the process. You got to let it happen, because that's what makes taking a 3-to-1 trade and around my strategy work. Because every trade I'm taking, I'm either making, we were talking $10, I'm either winning 30 or I'm losing 10. And if I let all these trades expire, and I know I'm losing track of what I was saying here, but at the same time, another thing traders do, newer traders, they'll let their losses go. That's why we put a stop loss on, especially for stuff like what happened in the last week with these huge drawdowns. People, if you got out, if you had your stop losses, you had a plan right from the very beginning. You know what? I'm taking this trade because I think it's going to go up 20%. And I'm taking this trade because we are above this historical support. We back tested this now. What was once resistance as support. And the reason why I'm taking this trade is because we're above that level. So right from the beginning, if it falls below that level, I want to be out of the trade, because that's why I took it. I took this trade because we saw this back test. We saw that we have support now where it was once resistance. And you set your stop loss, you have a plan, and you just let it go. Always. I mean, at least if that's the style of trading you're using, because you're either going to be right or you're going to be wrong. But if the statistics and the probability are in your favor, it doesn't matter if you're right or wrong. You know, you can't be emotionally married to a trade, because sometimes they just don't work out. Sometimes, you know, with crypto, sometimes trades won't work because Bitcoin, you know, throws a tantrum. With stocks, sometimes trades don't work because you're in a trade that looks great on a chart. Everything about it is wonderful, but you just get bad news. We've had a couple trades this year. I think there was a pharmaceutical company, Blue, or a biotech company that we were in. Everything looked great, man. The trade was awesome, and out of the blue, where the news comes out where somebody had been hurt in one of their trials. It's just stuff you can't predict. But if you're using logic, if you're using statistics, if you're using, you know, the right elements to define your trade in the first place, the reason why you're taking it, and you have your stop loss and you have your set profit, the emotions are out of it. You did your job. You brought a good case to the judge. You said, I like this asset because, you know, we're at a support line. You know, this would make sense to reverse here. Not only that, Judge, we've got bullish divergence on the oscillators. So this is telling me it's going up. This tells me it could be a point where we reverse. The RSI is telling me this. You know, it's like what you should always do before you take trades is break it down. Why am I taking this trade? What would make me want to get out of this trade? Do it before you're emotional about it. Do it with a plan ahead of time, because that's when you're using data. You're using, you know, the chart looks good. I've got my bullish divergence. I'm at a support level. We're coming off of a nice retrace. That's a reason to take a trade. If it works out, great, but sometimes it won't. You got to understand that. And having a plan, having your targets and your stop losses set up beforehand takes you out of the emotional response. It's either going to happen or it's not going to happen. And it's going to make you a better trader. You got to trust. You just got to trust, whatever strategy you're using. And if you don't trust it, you're making a mistake if you continue to use that strategy. But position sizing is important too, and that's why I brought it up today, because if you're in a trade that you're extremely emotional and nervous about, you're probably risking too much. And having the same trade sizes every time is going to alleviate some of that stress. Having your set profits, that's going to take some of that away, because a lot of people, some traders, they don't want to take profits because they think it's going to keep going up forever. And it does sometimes. Sometimes it'll go up for a long time. But if you don't have a plan, when are you going to get out? You're just going to let it go forever. You got to think to yourself, what would make sense? If I am, if you are familiar with the Wyckoff method, we talk about the composite operator, right? You're taking everything you see on the chart and, the market, the asset, and you kind of, it's kind of a psychological thing. You look at that as if it's one guy, the entire compilation of traders, the market and everything. It's one guy. He's the composite operator. And if you think about it like that, you can go through a reverse argument, right? So if I'm taking a trade, when we got this bottom down here on Bitcoin, I'm just using this as an example. You could think, well, the composite operator, look at it like it's the market maker, like he's at a poker table playing against you. He's going to try to trick you because he wants to buy up everybody's cheap Bitcoin, or whatever asset it is. So you got to think about that too. If you're buying into an asset, you got to think about, well, what could happen afterwards? You got to have think ahead a little bit. and that's, you know, we were talking about waiting for confirmed support. You know, that's one way you know that I'm trying to think how to put that. I guess that wasn't it. It's the best thing you could do for yourself is not only are you trying to find arguments to take the trade, but you can also think reverse. You know, what could go wrong? What could happen in you know, if somebody else, every time you're taking a trade, you think about it like somebody's taking the reverse of what you're taking.
All right, Jameson, I'm going to jump in here and wrap it up. We're a little over time.
Yeah,
so,
I'm going,
all right, everyone, smash the like button if you haven't already.
I appreciate you guys.
Thank you very much. We will see you next week.
Thank you. And if you guys want, follow me on Twitter at Trade Nomadic. If you got any other requests I missed while I was going on, feel free to drop me a message and I'll take a look at it for you.